Well, as global companies rush to grab market share in the EV market, the Japanese government has announced plans to ramp up support for batteries production, pledging about $1 billion in new subsidies for Toyota and other manufacturers to strengthen Japan's battery supply chain. Nikhil Bhandari is a co-head of APEC Natural Resources at Clean Energy at Goldman Sachs. Nikhil, good to have you with us. It seems that everybody is ramping up battery production, but can it really match up to China's dominance? They have an entire vertical supply chain going from mining the metals to producing the EVs themselves.
Yeah, no, thank you for having me. As we are moving into the low-carbon future, the role of batteries is becoming critically important. And we are seeing an explosion of investment in the battery technologies globally. Now, especially in this part of the world, which now account for nearly 90% of the global supply chain. Now, all this focus means that the industry is evolving rapidly, and investors need to be alert. We are seeing multiple factors, from advancement in chemistry to the rising policy focus in onshoring the supply chains ex-China and oversupply in certain areas. So at Goldman Sachs, we've been writing this series of report on future of batteries and touching topics from the batteries metal greenflation to the self-sufficiency of the supply chain. Now, to your question, we are seeing already headway being made in onshoring the supply chain outside China. Take an example. In the United States, we have the Inflation Reduction Act, which is, in our opinion, the most supportive regulation in the clean tech history. And we see U.S. becoming self-sufficient in the battery cells by 2026 with the help of the Korean battery makers, who will account for about over 50% market share. The U.S. situation is a little different. We are seeing an oversupply of batteries coming out of China because they've spent over a decade doing R&D for batteries and have scaled up. And we think that oversupply can spill over into the European market to ensure there is enough batteries available in the Europe side.
So what does the oversupply mean in terms of demand and supply? Will that mean ultimately margins will get hit?
Yeah, so we are expecting the battery prices to fall by 36% from around $169 per kilowatt hour this year to about $108 per kilowatt hour by 2025. This is driven partly because of the oversupply of batteries we are seeing out of China, which may spill over into the European market. But it is also driven by the policy incentives-driven subsidies, for example, the U.S. Inflation Reduction Act, and because of a pullback in the battery metal, especially lithium, where we expect prices will further more than halve by next year.
Nikhil, Martin here. Let me quickly jump in. So the cost is going down, and that's good news. What about the weight, though? Because from a cost performance point of view, that has also been a big challenge.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.